Hello everyone, this is Rai Abdurrahman, founder and the CEO of the Forex Inc. Welcome to this video. In this video, we are going to discuss how is coronavirus pandemic affecting financial markets all around the globe. So first of all, let's dig into what is coronavirus. On December 21st, 2019, the World Health Organization came to know of several cases of unusual pneumonia in Wuhan. It's a city of 11 million people and the education hub of China. Upon further research, it was discovered that it was a virus called coronavirus that was causing a severe acute respiratory syndrome illness, COVID-19. By that time, the disease had already affected thousands and killed dozens of people in China, and from there it started spreading just not to be stopped or slowed down. At the time of this video, there are over 1.7 million confirmed cases all around the globe, 108,000 deaths and only 400,000 recoveries according to World Health Organization. The coronavirus is affecting 206 countries and territories around the world and two international conventions. Almost all the world is under lockdown and severe economic and social pressure. So let's have a look at how is COVID-19 affecting the global economy and financial markets, including forex, commodities, and equities. So let's discuss forex trading first of all. After this coronavirus outbreak started, it reached the whole world within weeks, and that's way too scary. As almost every country is under lockdown, people are losing their jobs and the economies are crashing. Almost all the forex pairs are on fire right now. The United States dollar is having the most of the hit. Since February 2020, US dollar is a whopping 4.56% down against Japanese yen, 1.35% down against euro, 7.32% down against British pound, 10.09% down against Australian dollar, 4.08% down against Swiss franc, 9% down against New Zealand dollar, and 6.93% down against Canadian dollar. And then comes the gold. Gold is one of the most volatile pairs of all the commodities that are being treated as investments or an alternative to fiat money. The gold is up by a whopping 12.39% against the United States dollar. The reason for this much incline in gold's price is the sentimental situation of the financial markets and simple demand and supply. After the first case of coronavirus was reported in Snohomish country, Washington, United States, on January 19, 2020, US stocks started engulfing. The S&P 500 started its journey toward the boards in February, all-time famous, and the apple of the investors' eyes S&P 500 declined 10.25%, just to be followed by another swing of 13.07% in the month of March. This chaos and bloodbath caused average Wall Street investors to panic and they started to sell their shares. That increased the demand for gold. And boom, there you go. The gold plunged 12.39% during this coronavirus pandemic. And then there is crude oil. West Texas Intermediate, also termed as Texas Light Sweet, is a grade of crude oil used as a benchmark in oil pricing all around the globe. It is the underlying commodity of New York Mercantile Exchange oil futures contracts. Crude oil also works the same way as gold, just demand and supply. After Donald Trump announced a complete lockdown in the United States in late March, the demand for crude oil dropped as all the industries, transportation, and businesses were forced to terminate their operations, which led to massive supply and jaw-droppingly less demand for petroleum products and ultimately forced the prices of crude oil to be dumped. Since mid-January 2020, the prices of crude oil have been on a ride to the junkyard and have already declined a whopping 60.05% and are currently lying at minus 67.18% on a monthly pace. This massive drop of crude oil prices forced OPEC members to hold ninth extraordinary OPEC and non-OPEC ministerial meeting that went on for more than 9 hours, in which two prominent members of OPEC, Russia and United Kingdom of Saudi Arabia, agreed on an overall production cut of up to 10 million barrels per day. But the deal didn't go well as Mexico disagreed on the settlement and rejected the instructions of a production cut. On the other hand, United States of America, the biggest crude oil producer with a share of 19% worldwide, decided to support Mexico in its stance, which failed these measures to stabilize the oil prices in the global market. And the overall bias still looks the same, and the expectations are that the oil prices will be declining this week too. This was it for today's video. Thank you so much for watching, and if you like this video, give it a thumbs up and share it with other fellow